Good morning. It's Friday, January 12th, about 6 a.m. Central Time. Overnight, the precious metals are higher after yesterday's sell-off. You have February gold up $34 at $20.53. March silver up 48 cents, $23.18. March copper up 1 at $3.78. And April platinum up 14 at $9.33. So yesterday we saw all these markets moving right up into that 7:30 release of CPI. And what happens? Well, U.S. inflation data, it had picked up. The Federal Reserve looks like they got a bit more work to do here after yesterday's slightly hotter than expected CPI data. The Federal Reserve Bank of Cleveland President Loretta Mester said it was premature for the Fed to cut rates as soon as March, and that's what really put pressure on the markets. And markets kind of sold off all the way into that. You saw U.S. equities under pressure, and you also saw all the metals contracts under pressure. The dollar index gets a boost, and things were just kind of unraveling here, looking like there's no hope. Now, as the day progressed, a lot more news and a lot more information about the Red Sea conflict had started to come out. There was news that the US and the UK and other countries were coordinating these attacks on the Iranian-backed Houthi rebels in Yemen. And because they've been stepping up these attacks on these ships, we want to retaliate in some capacity. So they use fighter jets, they use submarines, they use aircraft carriers. And really the question is this war in the Middle East, is it expanding? So it surely looks like it on the surface. And if you look at the market reaction, well, you've got February gold up $34. You got March silver up 50 cents. You also have the February crude oil contract. At one point, it was up about 4.5%, 5%. We're trading just right around that $75 handle. So it really tells you that things could be escalating and investors are a bit nervous going into the weekend. So you're seeing some short covering. Remember, crude oil contract is one of the most shorted contracts right now. People think that as you raise rates, crude oil futures need to come down. You also think that you're getting this kind of recession, soft landing, less demand, things like that. U.S. production is starting to peak and is also starting to expand a bit. So that's kind of the bearish picture that most people are playing. They're not playing this type of geopolitical safe haven like many of you are. Now, looking at some other things here, if you look at copper and you look at silver, they're just not really reacting as great at the moment, and it's because China is still in this deflationary cycle, and it's one of the longest streaks since 2009. They really need some government support to reverse that, and you should see prices start to push back higher if you get some kind of backing by China. That's where silver can really start to catch up again on gold. You look at the way the chart pattern plays out, silver futures got to about 23.73 down to about 23.65, and then they started to bounce from here. But really, we've got to get above 23.40 in order to have some kind of substantial breakout to the upside, kind of retest some of these higher levels. 50-day moving average, 23.90. Above that, the 200-day moving average, going to be right around 24.34, and we get above that, I think it's game on. Now, if you look at the gold market, slightly different picture here. Came down to that 50 to 200-day moving average, which we outlined over the last few days, pocket support in there, and we've got this kind of bounce up here. So we'll have PPI data coming out shortly, about an hour from this release of this video, and we'll see how that plays out. You get that softer reading, we really could start to move up substantially higher. You look on the gold market, I think your next major level of resistance is going to be right around that $2,100 level. So shift in focus here. A lot of people calling in asking about Bitcoin, Ethereum. We do have a futures contracts on it. It is 1/10 of the size. So if Bitcoin is 46,000, it's about $4,600 worth of Bitcoin. Margin requirement quite low on it. Same thing with the Ethereum. It's 1/10 of the Ethereum contract. So if it's about $2,500, you got about $250 worth of Ethereum. Remember, each person needs to look at and analyze, how does crypto play in their portfolios? What types of risk, what types of things do you want to have with that? Do you want to have some small exposure? That's kind of a way to play it, a simple way to play it, where you get the 24-hour access, things like that. I've seen people play around on like Coinbase and Robinhood, and I've seen those bid offer spreads. I think they're a bit tighter using the CME's product. I think the fees are a bit less as well. So it might be something you want to consider, for your investing portfolio. If you got any questions, give me a call. Love to talk to you. It's a snowy Friday here in Chicago, so it's very blustery out there. It's about 8 to 12 inches of snow we're expecting, so I'm kind of excited from that. Coming back from Florida, haven't seen snow in a year. If you got any questions, give me a call, 312-858-7303. Remember, futures and option trading does involve risk loss. May not be suitable to all investors. Good luck and good trading.